Hello and good day to all friends. I am Mujtaba Rasti from the Thales team, and today is November 26th, 2025. I'm here with a morning analysis of Bitcoin using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, the responsibility for any profit or loss is entirely your own. As always, we filtered the trades from yesterday, November 25th, up to now for tomorrow's expiry in the database section. You can see a bearish outlook dominating the curve, with profits seen below 83,000. On the other hand, above 87,900, the curve enters a loss, which is essentially our ceiling. From where we are now up to 85,000, the delta is increasing, meaning we reach the delta peak, which actually indicates the end of put selling and marks a price floor at 85,000. If this support is broken to the downside, you can see that the curve turns bearish, put buying gets activated, and according to the curve, we could even move toward 80,000. On Friday, actually, put buyers are dominating. They've targeted 84,700, and it seems that since yesterday, if we consider the trades, we're in the process of achieving this target. Call buyers see profits above 8.9 and 7.0. Overall, among the sellers, put sellers are still dominant and have set 8.5 as the floor, while call sellers see the ceiling at 8.8 and 8.0. Based on the trades entered since midnight yesterday, it appears that we're in this corrective trend favored by put buyers and sellers. It's possible, based on the call buyer's perspective, that we might see an upward move to 88 or even 88 and 89, but we still can more likely expect a correction toward 84. In the next image, you can see that we've moved the slider forward and reviewed the trades from the start of today. As you can see, the curve situation becomes 90. As we go forward, 90 becomes the floor. This 90, 84, and 500 is the ceiling at 89, and its peak profit is at 87,900. It seems that the bullish move that started an hour ago could end around 88 to 89, as we mentioned, and we'll probably see the move continue toward 84. If we look at the next slide, you'll see that we've reviewed the trades processed in the database. As you can see, in the process database as well, a bearish sentiment dominates the curve, and profits are seen below 83,500. On the upside, on average, our ceiling is seen around 90,000. Of course, that's not on this curve. In fact, as you move the slider forward, the curve starts to fluctuate again. It's almost like the oscillating curve of the raw database, and it fluctuates between 85,000 and 90,000. Let's look at the next slide. Alright, here we've moved the maturity date in the raw database to the end of November. You can see that for the end of November, specifically November 28th, which is the end of the week, the curve still has an upward trend, an overall bullish shape. Around 824,500, we have an important support level, about 824,500, which is a significant floor. If this floor is broken, it could take us down to 82,000 or even 80,000, with 80,000 being the lower gamma level, which you can see is relatively strong. But on the upside, you can see that the curve turns profitable from 89,000 and we're on the verge of moving upward. It could go up to around 93,000 and then 95,000. In fact, we could see movement in that direction, and you can see the upper gamma level is actually around 90,000. Alright, let's move on to the next image. Alright, in the next image, you can see that we've processed the data in the database, moved the slides forward, and reviewed the trades for November 28th from the start of today. Again, you can see that uncertainty dominates the market. Put buyers are pushing the downside, and the downside money is also turning profitable. Put buyers are actually targeting 80,000, while call buyers are aiming for around 91,000. However, it seems the downside has a bit more strength, both from the delta that's penetrating downward and from the gamma level, which is also stronger on the downside. So it looks like the bearish side might have a bit more weight here. In this image, as usual, you can see the agreement between buyers and sellers, with the upper agreement at 90,150 and the lower agreement at 84,400. You can see that the lower agreement is slightly in profit, while the upper agreement is completely at a loss. The lower zone isn't really a zone, it's just a line, a single point, a precise point that shows the maximum agreement between buyers and sellers at that spot. So, overall, from this structure, what can we conclude? It's likely that a move to the downside is a bit more probable. Now, let's move to the next image, which is about the entry points on our indicator. You can see that the high and low have shifted slightly downward compared to yesterday. That upward movement we saw in yesterday's highs and lows has stopped. You could say we've stayed flat, with a slight downward shift in the highs and lows. Moving on to the next slide, we've reviewed trades above 10 Bitcoin for tomorrow's expiry. Among these trades, there's a standout trade, a 100 Bitcoin put purchase. This is significant. It's our largest trade, targeting below 84,000. This trade was entered yesterday morning when the price was around 88,000, so it shows that the trader's view is currently being realized as we're moving downward and their target is below 84,000, which we still have some way to reach. In this image, we've also reviewed trades above 30 Bitcoin for the November 28th expiry at the end of the week. You can see both bullish and bearish views on the curve, but the bullish view has a higher chance of turning profitable. The reason is, as you know, if we move downward, the curve at a point around 80,000 enters a steep loss. That means put buyers have to pay a high premium to turn a profit, and around 80,000 they have to endure significant losses. Meanwhile, moving upward is much smoother. With a small move, call buyers can turn a profit. So, we see the upside as more likely, and in this image, you can see that around 824,000 we have an important support, and the curve turns profitable above 90,000. Still, among these 30 Bitcoin plus trades, there's another very notable trade, a heavy 500 Bitcoin put purchase for the 82,000 strike, which again signals a bearish outlook. It's a bit of a warning for us that this bullish scenario doesn't mean we'll rocket upward from here. There will be ups and downs. Another trade to mention, before I get to that, let me say that this 500 Bitcoin trade was entered at 6 p.m. yesterday, so there's still time for it to play out. Lower down, you can see there was some downward movement when this trader entered the market. And it's a heavy trade, meaning that if we remove this downward leg, this 500 Bitcoin trade, the downward leg of our curve would actually fall into loss, and our curve would become entirely profitable. So this downward leg that's currently in profit is heavily influenced by that 500 Bitcoin trade. Another notable trade we can see among all the trades is a 250 Bitcoin put sale, which has targeted the 83,000 support. A 250 Bitcoin put sale that has also targeted the 83,000 level, which is also quite interesting. Finally, let's move on to the liquidity heat map. It really makes you second guess yourself, makes you hesitant. As you can see in the heat map, there's dense liquidity on both sides of the price, which makes it a bit hard to judge. Maybe you could say there's a bit more liquidity on the lower side, although it's still tricky. It kind of feels like there's a chance for movement in either direction. Given the dominance of call and put trades and the few heavy bearish trades we reviewed, it seems the market still shows a tendency to touch 82,400 before moving upward. We might see another move to 82,900 or 82,800 in the coming hours, but we still think it's a bit more likely that before the upward trend starts, we'll probably see a move down toward around 84,000. Also, keep in mind that this afternoon, I think we have the US unemployment rate news coming out, which could be a catalyst for price movement. From what I've seen, it looks like the forecasted unemployment rate is higher than the previous one. I think the previous rate was last week, and it's increased. The previous number was 220,000, and they forecasted 226,000, which is an increase and, as they say, a negative signal in a way. Of course, it indicates a kind of recession, and considering that, starting from December 1st, the Federal Reserve is planning to begin economic easing and quantitative easing, this data lines up. So, this higher unemployment rate that might be reported could create some recession fears, a negative sentiment, and a reason for a move downward. After that, the same recession fears would lead to the economic easing policy that's set to be implemented from December 1st, with money printing and liquidity injections and all that. Obviously, some of what I've said is speculative and based on probabilities, but the afternoon news could be a catalyst. Thanks for your attention. I hope this was helpful. Until the next afternoon analysis, goodbye.